a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about IPO ETFs. And we know that IPO market has been really hot this year. In fact, 2020 could be one of the busiest years for IPOs on record. And most of the companies that are making their public debut this year, they are new economy companies that benefit from coronavirus driven trends. So these are companies that benefit from work from home, stay at home environment, or some of these companies are working on coronavirus vaccines and treatments. And some of these companies that benefit from coronavirus driven trends, they have done very well this year. For example, Zoom Video, Peloton, Moderna. So that is why there is a lot of investor interest in newly public companies. And also, there's a lot of liquidity in the system, thanks mainly to the Federal Reserve. And investors are looking for growth in this low growth environment. And most of these companies, they have a lot of growth potential, though many of them are not making any profits. Companies we have seen they have been taking different routes to go public. There are traditional IPOs, for example, one of the biggest and most highly anticipated IPOs of the year, Snowflake, took a traditional IPO route, and there was a lot of interest in that company, the cloud software company, because it had Warren Buffett's backing too. Buffett's company had invested $250 million in that company. So the company popped, the IPO did really well on the first day. Some other highly anticipated IPOs, for example, Palantir, Asana, they are using the direct listing route. They are not raising any fresh capital. And there is another area which is very hot this year. Those are special purpose acquisition company, or SPACs. So many companies are taking the SPAC route to go public, and there is a lot of interest in SPACs this year. And in fact, there would be an ETF that would focus on SPACs. So we will talk more about SPACs in a later video. But basically, these SPACs are blank check companies. Their only purpose is to acquire growthy private company and take it public. Now, on the second slide, I have investment case for IPO ETFs. Now, we know that the new public companies, they can be very volatile during their first few weeks, first few months, or even first few years of their trading. So that is why instead of betting on individual companies, it is better to take the ETF route, because ETFs provide diversified exposure to these newly public companies, and these ETFs provide exposure to these companies before they are included in broader equity indexes, major equity indexes. For example, Google was included in the S&P 500 index only about 2 years after its public debut. Now, investors should note that these ETFs do not get pre-IPO pricing. In fact, none of the retail investors get pre-IPO pricing. That is only for that benefit is reserved only for institutional investors, and they also do not participate in the first day pop or drop. But that's fine, because trading in the first few days is very volatile. So that is why these ETFs include companies only after they have been trading for at least a few days or a few weeks. Now let's take a look at the two IPO ETFs. So the first one we are talking about is by Renaissance. It's the Renaissance IPO ETF, ticker symbol IPO. Very easy to remember. And this has done really, really well this year. So that's why there's a lot of focus on this ETF. It includes recent US listed IPOs, and it holds them for 2 years, has about 200 million in assets, and charges 60 basis points. So to learn more about this ETF, we can go to the code page on Zacks.com, read our articles. I did a podcast with the provider, the ETF provider, Renaissance. That's an interesting one, so you can listen to that. And then you can go to the external homepage, the Renaissance web page for this ETF, and look at other details. So it includes new companies either on a fast entry basis within a few days or during the quarterly review. And then companies that have been public for 2 years are removed. So it holds IPOs for 2 years. Now, looking at the holdings, you will see why the ETF has done so well. Zoom Video, which is up like 600% this year, is the top holding, which with more than 11% weight. CrowdStrike, Moderna, Pinterest, these have also done very well this year. So that explains Peloton, and that explains the excellent performance by this ETF. And you will see that it is a bit top heavy. The second one that we want to talk about is by First Trust. It is the First Trust US Equal Opportunities ETF, ticker symbol FPX. So there are a couple of differences. It holds the 100 largest US IPOs. It holds them for 1,000 days, so about 4 years, as opposed to 2 years. It charges 58 basis points. It's much bigger, 1.4 billion in assets. Now, to take a look at the ETF, again, you can go to the code page on Zacks.com, read our research report, articles, and go to the external homepage, First Trust webpage for this ETF. So top 100 companies ranked by market capitalization, and it uses some screens so that those are the most liquid companies. Now, it also includes spin-offs, and in case a company, one of the constituents of the index, merges with a larger company, then the resulting entity is included in this ETF. So looking at the top holdings, you will see Snap, Thermo Fisher. That's why you see Thermo Fisher, because it had merged with one of the recent IPOs. You will see Uber. You will also see PayPal, which was spun off from eBay in 2015. Now, on the next slide, I have the performance chart, the comparative performance versus the S&P 500 index. And you will see, because of the difference in holdings and ratings, there is a lot of difference in the performance of these two ETFs. The Renaissance IPO ETF IPO is up more than 82% over the past year. FPX is up about 25%, whereas the S&P 500 index is up just about 12% over the past year. Thanks for watching. Make sure to subscribe to our videos so that you don't miss out on anything. And also make sure to check out Zacks.com/promo for an interesting offer. I'll see you next week.